Good morning. What's going on, everyone? We're gonna talk about Cellar, or we're gonna do a little bit of Cellar unboxing. We're gonna talk about Yahoo and Apollo management. So real quick, what is Cellar boxing? So Cellar boxing is not shorting. Cellar boxing is when an over-the-counter security is boxed in at the lowest possible price point, being 0.0001 cent per share, and no bid. That is all Cellar boxing is. This is a term that no one uses. No one before the post in 2004 ever mentioned this. There's only one video on it, and it has no bearing on today's situation. Cellar boxing is achieved by the practice of none other than naked shorting. How do you get a price down to 0.0001? You naked short it. Also, it's only a viable strategy to use on securities with large amounts of debt that are highly diluted and that have poor financial performance. None of these apply to GME. Now, while this may have been the in-game goal, that's obvious. Of course, they want to short them into bankruptcy. Then they don't have to cover their shorts. But the point is, no one uses this term until this weekend. And once before in 2004, and there was a video made in 2011. The focus should remain on naked short selling. Now, let's talk about Yahoo. What do we notice about the data provided by Yahoo? You'll notice there's these small little numbers next to any data provided that's not from Yahoo. So if you look here, footnote 1, data provided by Refinitiv. So held by insiders and percent held by institutions. Data provided by Edgar is Supernote 2. 4 is Morningstar. 5 shares outstanding is going to be from the most recently filed quarterly or annual report, and market cap is calculated using shares outstanding. So knowing this, what do we notice about the float? There's no Supernote. Also, what do we notice about this data set here? There's no Supernote. What about all of these? No Supernote. Now, what can we gather by this? Well, this is not correct. So, this is not correct. They do not have $701 million in debt. So, are we saying that this is correct, but this isn't? You just gotta, just think a little bit more carefully on this stuff. Because let's go to the main event. Who owns Yahoo? Well, up until September 1st of this year, it was a joint venture between Verizon and SoftBank. Until recently, Verizon sold 90% of Yahoo to none other than Apollo Capital Management. Now, Apollo Capital Management had a put position in GameStop that they sold out of as of 8/16. And on top of that, hedge fund and insider trading news, Stephen A. Cohen, Citadel, Apollo Global Management, LLC. They were involved in a giant insider trading ring in 2018. And then also this year, Citadel hires Apollo's corporate credit trading head, Bharat, who is he's a portfolio manager for Citadel now. So while Cellar boxing is obviously not a good tactic, and it's obviously a bad thing, it's not relevant to today's situation. So yeah, I believe Yahoo's been compromised now, so keep that in mind. Hopefully this helped. And again, before this weekend, Cellar boxing, no one talked about it. And as far as Sears and Blockbuster, they're literally unboxed, because if they were in a Cellar boxing position, that literally means you cannot get out of it unless some miracle happens. So the point is, anything that's Cellar boxed likely is Cellar boxed for a reason, and it's likely due to poor fundamentals on top of predatory naked shorting, which is always going to be the problem. Predatory naked shorting. Hope this helped.